Dear Desmond, thank you for joining our program today.
Thank you for having me,
Well, can you tell us how the MPF is doing in the first half of this year?
Right, if we look at MPF performance, right, we came from a pretty tough year in '08 when, in general, equity fund performed quite badly in view of the global equity market meltdown. Since the March '09 low, actually we've seen a very strong rally in the global equity market. This has actually moved most of the MPF funds back to a positive territory. We look at various different products. If we look at lifestyle funds, for example, where they would have equity and fixed income exposure in it. In general, we would have, since the start of this year until probably the end of May, June timeframe, it will probably result in a mild single-digit positive return to probably mid-teens type of return. For more aggressive asset classes, for example, Hong Kong and China equity or Asian equity in particular, they tend to have better performance. Average return would be around 20 to 30% return. The other side of the spectrum on fixed income, obviously we had a very good year last year on bond investing. But this year to date, there will be probably a little bit negative in terms of 1 to 2% negative return in the first 5 to 6 months of the year.
Mm-hmm. And what is the outlook in the second half this year? Do you think the MPF will have a better performance in the second half?
Yeah, obviously, I think the worst is over. We're no longer looking at a global meltdown scenario. Having said that, if you look at US and Europe, the economic figures are still not going to be very positive. And the other side of the equation is if you look at the regional prospects. So if you look at China, look at Asia economies, you're seeing definitely light at the end of the tunnel. So second half of the year, we expect market to be performing relatively all right. Probably if you look at lifestyle funds, we should be expecting somewhere between 10 to 15% return for the whole year.
Mm-hmm. Under the MPF, the members can choose to have more voluntary contribution on top of the mandatory contribution. Do you think this is a wise decision to do more voluntary contribution under this market situation?
Definitely. I think if you look at MPF contributions right now, I think voluntary contribution only account for around 6-7% of overall contribution levels. So a lot of investors at the MPF space still have the wrong impression that the mandatory contribution of 5% from them, 5% from the employer would be good enough to warrant a very comfortable retirement, which is actually of the contrary to that. Because if we recently did a survey and we looked at MPF members in Hong Kong, how much they expect to get at the age of retirement versus how much they actually want to get, there's a gap of around 1.6 million Hong Kong dollars. So how do you make that up? How do you actually minimize the gap to make sure that you have enough for retirement? Voluntary contribution will be the key. So we think at all times, as I mentioned earlier, we're going to be here for a long haul. If you have spare money, if you want to look at picking up that return opportunity and potential, voluntary contribution would be a very good option to take.
That's a very useful information for our audience.
Sure.
Thank you very much for joining our program today.
Thank you.